we've been talking about what we mean by a property mastermind. Now we've finally gotten to the part where our property coaches are actually going to come up and tell you how do you plant yourself in terms of being in a hot market, which property is the right property to invest in. So they're going to come up and just talk to us about which properties should you invest in, which properties should you not invest in, what to look out for. To introduce them, Neo and Levu are the co-founders of Nong Wealth and property investors that are passionate about education and networking. So please just help me kindly welcome them on stage.
You choose the best on your team. So it's the same thing that we're doing with the property mastermind, that you want to form a team that is so solid that when you are actually going to be investing in a property, they're able to coach you or guide you that, okay, maybe don't do this, try this. What is your situation? Now, the thing that we like about Suspect is that with the relationship that we've had with her and the rest of our power team, it's more of a personal one, whereby I am able to actually call them and say that this is the thing that I'm going through and how do we actually deal with this. Now, the problem is that with most people, what they like to do is that, no, it's fine, I'll work alone, I'll grow my portfolio alone. But now you get into a situation whereby 10 years later, you're being asked that how many properties do you have right now? And you're still saying that I'm still paying that one from 10 years back. Why? Because you don't know or you're not networking with the right people. So today we're going to be speaking about something that's really deep and it's actually touching us as property investors: interest rates.
If you recall, last year, Bignama estate agents, this is the right time to buy now because interest rates are at their all-time lowest. What does that mean for you? Does this mean you stop buying? Then what? Must I ask the estate agents? What do we do now, guys? What do we do now? Interest rates have went up. Now the theme song has changed. We're still buying, right? Now then, what needs to then change? Because we can't use the same formula that we used before because interest rates were at their all-time lowest. So that's what you'll see right now, that we need to actually tweak a couple of things so that we're still relevant in this market.
Okay, sure. So let's go on to the basic economics, right? So when you're looking at economics, it's not that deep, guys, né? But when you're looking at economics, so you have the Reserve Bank and then you also have the commercial banks. So Reserve Bank is the one that governs money, right? So whenever a bank or commercial bank is like your ABSA, the ones that we go and ask for a loan from, right? So there's the Reserve Bank. Can I just draw it there? Okay. We have the South African Reserve Bank. Then South African Reserve Bank gives money to your commercial bank and the rest, right? Then these guys are the ones that borrow us, right? This is us as property investors. So when these guys borrow us, this basically means that the SARB will borrow the commercial banks, right? Then the commercial banks will borrow us money, right? So whenever you hear that the prime is going up or the repo rate is going up, that is what we're speaking about. So repo will start here, repo rate, right? It's called the repo rate. That's the interest that Reserve Bank, that's what they're charging the commercial bank, right? So when they're saying that repo rates went up, this means that these guys are charging the commercial guys more money, right? Then we have prime over here. We have the prime lending rate, right? Then the prime lending rate basically means that these guys will charge us. We're still together, right? Yeah. So now the previous prime lending rate was sitting at 7%. This was when estate agents were saying that you need to buy a property right now. If you don't buy a property right now, you're going to be left out and, right? So now if we're just putting it in basic terms, basic maths, we're saying that for every 100 rand that you borrow from the bank, you're going to be charged 7% annually on that amount. So on an annual basis, you'll be taking out 7 rand, right? Now we're looking at the current prime lending rate. It's saying that 9%. So this basically means that for every 100 rand that you're actually borrowing, you're going to be taking out 9 rand. So now the difference between the two is what? It's 2 rand, right? So now let's put it into property investing perspective. So now at 7%, the monthly bond that you would have been paying on a monthly basis was 7,752, right? This was at 7%. Now it's at 9% with a monthly bond of 8,997. let's bring it back home as property investors. If I'm renting out a property and my estate agent was saying that it's breaking even basically means that you're not making a profit and you're not making a loss. So what are they saying? That guyafana, but at least you have a property that's there by you, right? Now the interest rates go up and you didn't fix the interest, your interest. You're paying what? 8,997.25, right? What does this mean for you as a property investor? Remember, we spoke about a lease agreement earlier on, that we need to sign a lease agreement for 1 year if that's the particular case, right? Now, it can't be that in the middle of the year we're saying that, no guys, interest rates have increased, so I'm also going to increase rent whilst you're still in that lease period. We need to wait for the lease agreement to end. So now what does this mean? It means that you need to take out an additional amount of 1,245. Now, where is this money coming out from? From your pocket. So now this is why we're saying that it is always important for you to understand the numbers behind property investing. So property investing now doesn't become just me seeing a property and me taking out money or buying that property. Now property investing is becoming what are my numbers saying? What is my monthly income and what is my monthly expenses? And now even with that being said, that I love rental, if it does happen that it gets to a place whereby now I'm running at a cash flow negative or I'm losing money on a monthly basis, if I was to sell the property today, will I still make a profit? If I won't make a profit, then I'm not going into that deal. So number one thing that qualifies the property to be investable is that if I was to buy the property right now and I'm buying it for rental, it makes sense for rental. It ticks the first box. Rental, it's right. But now, if I was to sell the property today, will I still make a profit? If I won't make a profit today, if I sell it, then I'm not going to go into that property because interest rates can increase the way they want to. Now, if you are in a deal whereby if you do sell this property, you're going to make a loss, it's a huge problem. And now remember, if you're going into property investing, when I'm saying a loss, you're not saying that you lost 500 rands. You lost like a whole lot of money because now if you're looking at an estate agent only for a house that's worth around 1 million, you would have been losing 80,000 that you need to pay to the estate agent. We haven't spoke about transfer costs that you paid. We haven't spoke about the monthly bond that you are actually paying. So those are the things that we really need to take into consideration before we actually start purchasing the property.
Yeah. And what I'm happy about is that we're actually exposing property investing for what it really is. As much as Sitandi property investing, we really need to understand what are we putting ourselves in. Because you find people that are working, but this 1,245 is not so bad, right? Can you please have a calculator on standby so that we're all on one page? So I need you to punch this difference. This was on a monthly basis once it's increased, right? So it increased from 7. Over time, it gradually increased to 9. If I'm working and I'm ignoring the investment side of property, and then I'm saying, Guti, this 1,245 is not so bad. Look at it on an annual basis, times 12. 1,245 times 12. What do you get there? I hope you've got ink. We promised them ukuthi asiphumile until siqeda la. I hope the ink is ready there. So we're saying that 1,245 times 12. Yeah. 14,940. 40. Okay, there we go. 14, eh? Are we happy about this? So what is this? So that at least we're all on the same page. I want us all to be on the same page. What is this? Money coming out from you within a year, right? Because you were just looking at this to know it's not so bad. Let's just assume, best case scenario, that it doesn't increase again. Let's just assume somehow our expenses on a monthly basis don't increase. Let's just assume rates and taxes do not increase. Let's just assume levies don't increase. We know that that's not possible. We know that if you're looking back from the past 5 years, things have gone up. So if this was for a year and we just bought this property and we thought that 1,245 is not bad, I multiplied it by 12, 14,940 that I'm taking out, times, how long is the bond? The normal one? Times 20. 20 years. Where we at? Still not bad. 200 and? 298.
800.
800 again, okay. Okay, there we go. So this is how much you would have taken out in addition. So now the question would be then, how do I avoid putting myself in such a situation?